Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 7th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data across the pond. We got German factory orders. Came in lower than expected at negative 7.4%, was expected to be a negative 2.5%. Now that's a little bit discerning in a sense because we've been seeing these PMI numbers really kind of ramp up a little bit, which would mean that the purchasing managers of those factories think that they need to start producing more goods, but we're not really seeing that in the factory orders. That's why factory orders is a bit of a lagging indicator. You would think that the PMI, which is those purchasing managers, would see that influx of factory orders and therefore want to start ramping it up. But we're not really seeing that with this picture in regards to Germany in specific. Then here in the United States, we've gotten a couple of economic numbers, and we got the tip, which came in at 55.3, was expected to be 57.1. TIP is just an economic optimism. It's a survey of consumers, whether or not they feel good about the economy, political policy, and things of that nature. So not really a major economic number to really look at. And then later on today, we get final GDP for Japan. So that comes out around 6:50 Eastern time. So we get a couple of Japanese economic numbers later on this evening. GDP, current account balance, things like that. Anyway, on to the overall markets. We've got crude oil right now up just slightly on the day by about 11 cents. It is continuing to taggle with this line in the sand of the value area high, which is really looking like we're getting ready to see this value area high become the point of control for time and volume. We're just seeing a really big node there, and I'm surprised it really hasn't moved up. We could see that move up relatively soon. The one thing I'm wondering is if because it's the value area high that it is having a difficult time discerning whether or not that's 70% level. So 70% of the volume and time comes in between these two lines. So in order for that to really move up, we need to see some more volume here so that this line can slightly move up and this line can slightly move up. So that's interesting on the profile. Rarely do you see that happening, but we're seeing that happen now. Then on to gold futures falling out of bed. I'm actually looking at a couple of things because I think that really gold is not looking too good. It's gotten below this 50-day moving average. The move to the downside could start picking up pace. So I'm looking at a couple of trades for gold futures on the short end there. Then on to the bonds. Bonds, I've told you, I think they're going to be trying to stay right here somewhere, finding support around the 149 area. We are seeing that really just slightly below that by about a 2-tick margin. But at the end of the day, with the Fed policy looking like they're going to continue to increase rates, the bonds are going to really struggle with any upward momentum going forward for sure. And it looks like there's going to be a Fed move here in March, the next time they meet. So keep that in mind. Dow Jones Industrial Average off slightly by about 30 points. It's not covered its gap where we've seen the gap covered in the E-mini S&Ps and in the NASDAQ. We aren't really seeing that covered as of yet, just a smidge off of it as of right now. If we go and look at the NASDAQ, NASDAQ has covered its gap on that one move that we saw where it gapped up overnight for the most part. I can show you that a little bit better on the breakdown of the E-mini S&Ps. But the NASDAQ just off slightly by about $10, 10 ticks I should say. Then with the E-mini S&Ps, as you can see here, even on this chart, you can tell that they've covered that gap because they've touched the other side of that. So that gap has been covered. It's covered this doji here, so that creates that. It was gapped up to about here on the chart if you strip out the overnight session. So E-mini S&Ps have covered that gap. Whether or not they're going to rebound, I don't know, but we're not seeing a whole lot of volume happening up here right now. So it's getting a little long in the tooth. I could easily see this market wanting to at least come down here, which seems like a big move, but it's not really to come down to this value area or this node, if you will. I don't really see it wanting to come down here. I think the economic picture is looking pretty good, but we could see a little bit of a tantrum in the overall markets to retrace some of this, because you can see there was really no volume or participation going on inside on this rally. So if we get much below this node here, you could easily see it want to come back down and get to where there's been some volume and open interest going on. This is the breakdown in the E-mini S&P chart, so I can show you something real quick where we can see relatively easy that the gap has been covered. This is where we kind of closed out. The high here, excuse me, has been covered. It actually got touched yesterday, so they've completed that gap fill on the market. But one thing to note with this is we are having continued down move here where it is overlapping, which is good, especially for markets not having the gap. It's very orderly, if you will, but it is overlapping, and we're seeing consistent value area point of controls below the previous day's section. It's value area high. It's actually below the value area low. So as you can see here, this node is below the value area low, so it makes it very orderly, very systematic on the way back down. So it's just marching on down. We'll have to see if we can see this point of control move up inside yesterday's range. If we do see that, then it could indicate that we've kind of troughed out here now that the market has achieved that objective of covering that gap, which is what I was talking about when I saw that happen. I was like, the markets do not like to have the overnight session print different areas of the market. They want to have that inside of the day session. So we've seen that objective happen. So it could really go either way now that that's been covered. Then on to the markets that I've done with Mosaic, talking about the market profile. Anytime the market gets overextended to the upside and comes back down into that value area, it really has the target on its back. So in this, I decided to add some short deltas in Mosaic, which is ticker symbol MOS, because once it gets in here, this acts as a magnet. It's drawn to it. It's just like a moth to light. It's just got to go straight for it. And so I'm looking for it to come down here and touch these, at least the 28 handle in here. So in that, I've gone in to the April and sold the 32 calls for 46 cents. Now I was looking at doing a long put spread on this because it does have pretty low implied volatility. I'm just going to keep a very short leash on this. It's not fitting with any of my rules, and by trying to create this, I'm looking at like the 28.31 put spread for $1.50. It's trading around $1.60. I even looked at it a little bit wider, so everything is just outside of that 50% the width of the spread, and the risk reward there didn't make sense. This seemed like a better option, if you will. So I decided to go ahead and sell those. It's out the 16 delta. I'm also selling the 32 calls, which is well above this value area high. So I'm actually above this node. So if you think about these as like lines in the sand where you got to cross, or little moats, it's going to kind of stall out if it tries to rally up to these different nodes. So if it does happen to turn around, I think I'm pretty safe. But I think now that it's below this, that's going to act as a major resistance on the upside. It's blown through the 200-day moving average, and I think this is where it is wanting to go to kind of settle down. So that's why I went with that strategy there. Today we're going to be doing Festival of Traders, so I'm going to be talking about how to build out this market profile. I'm also going to go into the rules, how to trade around market profile in a sense, and go through some of those rules. So go to protraderstrategies.com so you can sign up for that. I'm going to be doing that at around 4:30 Eastern, and be about 30 minutes. I'm going to try and go through everything to set this up and set you up for success. All right. So go to protraderstrategies.com. If you can't take it easy.